Hello, everyone at Fintech Surge. Hello, hello, hello. Welcome to day 2 of the Fintech stage. We have a wonderful lineup of sessions for you today. For those of you who have flown in from abroad, welcome. And to our local delegates as well. We are here today at the Fintech Festival. And with this influx of people comes an influx of fantastic forward-thinking ideas and discussions and sessions. And so, ladies and gentlemen, we're going to have an incredible few days ahead. And now, without further ado, since we are running a little bit late, our first workshop of the day is on Fintech in the Metaverse, an introduction to the world of Metaverse, to Fintech, and to embedded finance. So please help me in welcoming Mr. Vikram Pandya, Fintech Director at SP Jain School of Global Management. Mr. Vikram, hello.
Thank you, and good morning, everyone. So let's start with the topic itself. I think everyone knows here what is Metaverse, but what we are going to do is we will try to understand and dissect how Metaverse is changing for fintech and embedded finance, how such products can be used within this ecosystem, and how things are changing, and what is the future of fintech in Metaverse. Right? And when we talk about banking, the world of banking is more traditional. People think that, okay, you need to be risk averse, which is true, but at the same point in time, how the experience layer that people have started building on top of Web 3.0 Metaverse and how that changes the user experience and journey is what we are going to talk about. So this is the agenda in a nutshell. We discussed about that. Now this is the quick overview of all the elements within the Metaverse. What are the different elements within the Metaverse that you have? First and foremost, you have digital currency or virtual currency as we call it, just to enable everyone to transact without any friction across the globe, and the experience layer, frictionless layer that we talk about can be materialized as a part of that. Then you have marketplace, digital commerce, and in this marketplace it can be virtual good, even physical good you can order, but virtual goods of course constitutes more than 95%. World of NFT, etc., you already know. And infrastructure layer, now this is where people talk about the VR headset, your AR headset, and you already know how many different devices are there, and it will further enhance the experience as we know. And you have very soon, like today or tomorrow, Quest Pro getting launched, which tries to even embed certain commercial elements into Metaverse right into the headset. Then you have some of the AR glasses, normal glasses that people wear, but it has AR capability, and even that AR plus VR experience is changing the way Metaverse interacts with the user and vice versa. Then you have device independence, which means that whether you use desktop, whether you use headset, whether you use mobile, you should be able to at least use the services, identify how things can work out in different environment, irrespective of operating system, browsers, technology. Gaming and digital asset, we already know about those things where people are using virtual goods within the games. You have digital goods which are user-generated content based. You earn something within that, you can buy and sell those items, and that again adds to the Metaverse experience layer. Now on the other side, you have some of the social events which can be broadcasted on Metaverse. You have seen celebrities using those events in order to connect to their fan base. The main benefit that Metaverse has is that people can be themselves, right? You don't need to worry about what others may think. You want to portray yourself the way you want to. You can experience the entire event very differently. You can express yourself much better. And that also adds to the overall experience. You have online shopping, workplace. Now, this is the emerging idea that even the workplace can be on Metaverse completely. You have Microsoft, even Meta working on some of the workplace environments where virtual boardroom is created. You have people conducting board meetings virtually. You have companies like Tesla, you have Ford, Mercedes. These people are using AR, VR in order to work remotely with diverse teams, geographically disconnected, and then trying to identify how they can work out even without traveling. Right? It can save time and cost, and the way you can interact is so natural that even if you are there, you can't express certain things. So there are certain areas where metaverse adds to the advantage, while the other part of the story is that okay, you are becoming disconnected with the world. So there are benefits, disadvantages, but you need to balance it out. You have digital humans, basically people call it digital twin, where you are creating whatever sensor data that you have, you are creating digital twin using that data set, use of Internet of Things, IoT devices to capture the data, identify what exactly is wrong. It can be a digital human for medical, digital human for sports, to identify how you can improve, how you can correct certain things. Even when we are talking, for example, right? Digital twin can be created to identify what we can improve upon. So all those things are there as a part of that. And finally, natural language processing to make it much more seamless for the user to interact with the system. And this is the overall elements that we have in today's metaverse. Now, very quickly, before we try to understand how metaverse and fintech or finance is getting interconnected, interwoven within each other, we will just look at the definition of fintech and embedded finance so that you can appreciate what goes behind this ecosystem and how metaverse can benefit from these two ecosystems, right? In the first case, fintech is all about using technology, emerging technology, to seamlessly provide frictionless experience to the user in design and delivery of financial products. Now the critical part here is design and delivery, which means that not only the distribution of the product, but also the product design, the way you can create that product for a specific segment. For any startup, whether it is fintech or otherwise, you have three different things to look at. First and foremost, segment. Segment means to whom you are going to sell to. Second, you have any idea? What do you have after segment? To whom you are going to sell. After that, what do you decide? Anyone? What will you sell? Product and services, right? First you decide to whom you are going to sell, your segment, product and services designed for that segment. And finally, you have channels to distribute that product, how you are going to reach out to them, right? And that is where fintech changes the entire game. Banks traditionally, of course, are selling financial product. Fintech just adds experience layer on top of that. Exactly the similar thing is happening in metaverse. You are already interacting with physical world. Fintech is, in a way, allowing you to consume financial services in the digital world. And further, metaverse can provide you with the experience layer on top of this to consume these services in the metaverse. Next, you have embedded finance. Now, embedded finance, as people may think, is something which is already embedded as a part of some journey. Now, let's assume you are buying flight ticket, and as a part of that journey, you never started with product consumption, right? You never wanted to buy any financial product, but then you started with insurance as a part of that, EMI that you want to go for. Again, it became part of that product, and that entire journey of booking a ticket, flight ticket, involves buying insurance, EMI, buy now, pay later. All these are the products embedded as a part of that journey. So that becomes embedded finance. And this concept works through API, application programming interface, where you connect with different application services, different platforms talk to each other. The beauty today is that this entire world of API is more approachable by people like you and me who may not know programming. By using integration platforms as a service like Zapier or IFTT, you are able to integrate those services easily by dragging and dropping. So the idea here becomes that you already have embedded finance, the world of embedded finance is available, and you can use Metaverse and embedded finance to smoothen the journey of the customer. Wherever that customer is, you can integrate those services and products. Now, this is the fabric of fintech, different subdomains that you have within the fintech, and different enabling technologies that allow you to solve those problems. Now, when you look at the first one, payment technology, anything related to payment. Next, lending. Third, insurtech. Fourth, you have wealthtech. Fifth and sixth, these are basically two different sides of the same coin. When you look at regtech, it is nothing but regulatory technology where companies try to comply with the regulator's requirement. And the subtech, which is supervisory technology, where regulator try to check that compliance using the technology. So you have regtech and subtech as a part of fintech overall. And for every first four subdomain, you will have some element of regtech and subtech involved. Whatever problems you have in those subdomains, you can solve using emerging technologies. And as you can see here, AR, VR, MR is part of that enabling technology. So the problem statements that you have from the subdomain, you can solve using one or more technologies here. And that is where the entire fabric of fintech can help you to solve the experience related issue for the customer. So the problem statement that Metaverse can solve will be around engaged user experience. So more user engagement is first problem statement. Second, availability, where you want to make sure that even when user is playing, right, then also he can use that. Third thing, different target segment. Now Gen Z will not go ahead and do branch banking for sure, nor he is more interested into traditional way of banking. That is where you can integrate certain fintech products as a part of the overall experience journey, right? So these are the problem statements typically Metaverse will solve. And it will use some of these things like blockchain, AIML, IoT to enhance that experience, right? So these are all the different technologies that it will use along with the base AR, VR to provide that solution. Now this is the interesting thing, case study one. We will look at the first case study in Metaverse. I'm sure many of you must have heard about this, but there are multiple such projects that you should know about, right? And the first and foremost is that you can have physical world involving Metaverse and then Metaverse involving physical world element of ATM. So you have one from Transact. This is the first one where Transact has created virtual ATM in the Metaverse. Anyone can embed that within the Metaverse that they have. They can earn commission out of that, and that entire journey of that user becomes seamless. Let's say you are creating digital space. You are creating your own digital space within the Metaverse, and you want to embed this ATM services within your virtual space. Let's assume this event is also broadcasted in Metaverse. So you will require some place for people to take out the money, convert fiat to virtual currency, and then use that virtual currency to consume the services. That is where this application or this solution can be helpful, where you have Metaverse enabling user experience to withdraw that money without leaving the experience itself. Next, you have ATM marketplace specifically on the Chainbyte, and what they have done is that you have typical ATM, physical ATM, and on the physical ATM, you can see some of the Metaverse solutions, right? And what I mean by Metaverse solution, you have your Metaverse user ID you can enter, for example, and it will link withdrawal to your wallet. That is one. Second thing is that, let's assume you are trying to buy or sell some NFT. You can list NFT also here directly. So this becomes physical world connecting to metaverse rather than the opposite. So both the cases we already have seen. What is the future of this, right? The future is going to be more exciting where you have all the different services on metaverse along with money withdrawal, right? This is more around the withdrawal part. Along with withdrawal, you will have deposits, savings, etc. linked to your metaverse earnings, right? Sometimes when you do certain things on metaverse, you get rewards, you get those tokens, and those tokens you can directly convert into fiat and add to your actual physical wallet. Physical means that it is on the fiat wallet. So here it can be useful again, where you are automatically converting your savings into fiat and then putting it. That will be the future. Next, second case study. Again interesting, this is banking metaverse as a service. Now this is designed for financial institution. There are multiple such service providers, but this case study is from Kia.ai. They have created something called Kiaverse. Now this Kiaverse is as a service module which allows multiple things that a bank can do, integrate within banking ecosystem. First and foremost, you have avatar creation, etc. Those are the basic things that you know, right? In any metaverse, you require those services. Then you have AI-based digital twin for business interaction. Sometimes you may not be physically available live, but you can have AI enablements chatbot effectively. But that digital avatar that you have created will work with the AI that is trained by you. That is the major difference, right? Rather than pre-programmed AI, the AI which is trained by your conversation, the way you are interacting, can be used for digital interactions. Then you have new customer onboarding and re-KYC. Now what is re-KYC? First time when you do KYC, it becomes onboarding. But when you require, based on the regulation, you require after few years, KYC to be done again and again. That is where you have re-KYC, and the experience that you have becomes much more simpler. That experience allows you to play a game, and within the game you can open your account, right? Let's assume that you have traditional banks like HSBC having their own presence, virtual presence on Decentraland or Sandbox kind of a platform, and within that you are going and you are opening your account. So physically or virtually, both ways now you can open the account, you can provide onboarding services. Then you have product information and portfolio analysis. Now there are two different things, so let's dissect those two parts. First and foremost, you have product information. This is nothing but you have overall product brochures, but in a 3D environment. Rather than 2D boring environment, you have a 3D. And you can experience some of these products more closely, saying that how the experience will be, how the product can be consumed, demonstration videos that you can include as a part of that. And portfolio analysis, this is more around robo-advisory and robotic analysis of your product. Now this product analysis that you have allows any user to go ahead and experience this end-to-end journey without leaving bank environment. Next you have navigation. This is where normal navigation, voice-based as well as gesture-based can work. And finally, you have environment that you can create for your own customer. Now this is different than a banking environment. You can allow even customers to create their own lounge area or whatever, right? You can allow them to create their own spaces. Allow customers to connect. As a meeting room, for example, you are providing a meeting room to your customer so that they can invite their friends and business partners to conduct meetings, and virtual meetings, of course. So it allows the overall engagement and word of mouth indirectly. So this is a metaverse as a service solution for banking. Let's look at the next solution. Now this is the complete metaverse bank. So what is the difference here? You have services which are available, and these services directly gets integrated within your metaverse, so whatever platform you use, as an embedded bank. Bank, we have seen what kind of functions they do. Most of those functions are available within this, whether it is digital lending, buy now, pay later as a product, whether it is savings. Of course, they work with some of the banks to convert into fiat and store it. But this changes the way people consume. You also get Metaverse virtual card. That virtual card helps you consume some of the products, right, directly within the Metaverse. So these are some of these examples. You have Zelf, and that is the solution which is available for Metaverse. Now there are few more interesting things that I would like you to see. Right? Within this case study, you have overall $13 trillion opportunity by 2030. That's what the report says, Citibank's report. Now this report shows the opportunity first, and let's look at some of the leading traditional banks in UAE or global banks working on Metaverse. Like this is 1 day ago, right? You can see this is UAE's commercial bank is launching the Metaverse location. Now what does this mean? It simply means that on platform like Decentraland or Sandbox, they are creating that digital location. HSBC already has done that. It was in a way first bank to do that. And that Metaverse location allows people to do whatever we discussed earlier. Similar to that, you have Metaverse portfolio for wealthy Asian customers. Now this is interesting because people are creating specific use case or theme based portfolio for some of the new age customers who may want to invest into Metaverse. So wealth management solutions are tailor made for Metaverse, as well as Metaverse is getting into portfolio management as well. Now these are two different things, right? One, we earlier discussed that you have robo-advisory using Metaverse. But now here, the Metaverse products, which are NFTs, virtual goods, they are now used as a portfolio. Then you have Multiverse Labs announcing, this is like very recent thing, world's first city in Metaverse, and what they are trying to do is, they are trying to create, again, entire user experience. You have user-generated content. This entire city in Metaverse that they have created, they are inviting more and more banking services within this. So what happens here is that you are creating a Metaverse city, similar to, let's say, UAE, etc. And then based on that, you are generating the experience. Up to this point, any questions, anyone, before we continue? Because this is the first phase which we have completed. Any questions, anyone? Okay, so let's continue. Now what I wanted to discuss around is CBDC, role of CBDC in Metaverse, right? Now I hope everyone knows about what is CBDC, Central Bank Digital Currency. And CBDC and Metaverse can have very smooth integration. Why? Because some of the CBDCs are token-based CBDCs, right? Not account-based CBDC. For example, when you look at India, they are planning to launch wholesale as a account-based CBDC and retail as token-based CBDC. The future will tell how the final thing comes out. Similar to that, UAE also is having that vision under the blockchain policy that they have. Then you have US, which has announced last couple of months back that they are also going to create CBDC. There is a policy paper that they have published, and most probably their CBDC will be account driven again for wholesale, and for retail might be token driven. There are around 12 countries which use account as well as token driven CBDCs, 27 odd countries which use pure token based, and the rest of them are trying to figure it out. 11 odd countries have cancelled their CBDC program. There are multiple reasons why they have cancelled their CBDC program. First and foremost reason being that they don't see enough value. If you already have digital ecosystem, there is not enough compelling reason for you to move ahead with CBDC, because at the end of the day, you are able to achieve your core objectives. And those objectives are making sure financial inclusions are happening in the market, and you are trying to create that seamless experience for the user. Now, for country like India, having CBDC, which they have mentioned that you will have some traceability for sure, so that has that benefit. But there are countries where privacy becomes very critical and acceptability because of that may not be that much. So privacy, if you want privacy, right, there is a, in a way, dilemma. What to do, right? You have a privacy issue. If you have privacy issue, if you have traceability, then the privacy is an issue. So the moment you have traceability, you have privacy issue. Now next, you are talking about acceptability. The moment you have privacy, the acceptability is not there. People will not accept it. And then you have convertibility. If not many people are going to work with your CBDC, maybe because it is having some issues, then you don't have convertibility in the next CBDC currency. So Metaverse, as we know it, is going to integrate with CBDC and Swift. Couple of weeks back, they have announced that they are creating first ever CBDC bridge using their own system, right? MCBDC bridge, you may know about, which Dubai and other countries came together and created that MCBDC bridge with Basel. But with this new initiative, anyone across the globe, which bank is part of Swift ecosystem, can allow transfer of CBDC. And this interoperability means that even the metaverse will benefit. Just imagine the major issue in metaverse is that today you cannot have complete interoperability. You first need to convert into from fiat to virtual, then virtual to some other currency pair, and then convert back to fiat. But here it can be pure fiat to fiat. And that again will help the overall ecosystem. Any questions, anyone, up to this point? Anything on metaverse or? Yeah. Can you give mic to him? Because then it is recorded for them.
How do you think the governments will evolve the concept of a CBDC and especially CBDC within the usage within a metaverse, right?
Sure. So in fact, I have day after tomorrow a special session on CBDC, same place I think. But for the time being, to answer your question, different governments are looking at CBDC very differently. For example, Singapore government has specifically mentioned that for wholesale we are open for CBDC. They have implemented project UBIN, as you might be aware about. But for retail, they are clear that they are not going to implement. Now, Indian government, they have a different perspective. What they are saying is that CBDC normally replaces the cash, and they are going to have account-based CBDC for wholesale, which will enable them direct quick settlement. It is going to live upon, let's say, RTGS system that you already have. But it is account with RBI, so the CBDC makes it much simpler. And you have a special question on this? Not already has. I'm saying that when you talk about CBDC, what India currently has is, let's say, digital rupee. Yeah, virtual cash. So bank money. Think like this. That digital rupee or digital amount that you have in your balance as a bank balance is your bank money. In concept of money, you have M1, M2, M3, etc. This becomes part of bank money. But on the other side, when you talk about CBDC, it is directly on balance sheet of the RBI. So central bank will have liability under the balance sheet, and that is the reason it has more trust indirectly or directly. The idea is that again, bank notes are different, or when I say bank money is different, but CBDC is more akin to cash, and that's why normally you will not find interest-bearing CBDCs. So that is another reason. Otherwise, if you have interest-bearing CBDC, even if interest rate is 1% lower than the banking rate, then you will have trouble in the entire ecosystem. Why? You are removing that risk, counterparty risk completely from the equation. And because of that, CBDC can be much more lucrative for people to consume. So it should be akin to cash, and I hope that answers your question. Any other question in Metaverse before we look at some of the other case studies or use cases? Okay, great. So what I wanted to discuss is that how certain things can come together and create a new way in which people can consume overall products, right? And this is where you have Metaverse 2.0. People use this term loosely. You can have Industry 4.0, for example, or 5.0. But ultimately, this is more about the transition, right? As we call it Web 3.0. So what exactly is Web 3.0 is nothing but the transitionary technologies coming together. Similar to this, you have Metaverse 2.0, where overall, all the services that we spoke about, right? I will just go back to that slide once. All these different pay tech, credit tech, insure tech, all these things are going to be connected to Metaverse. Major change will be on the insurance side first. Why? Because insurance in Metaverse can be very unique. Let's assume you first create digital twin. That digital twin allows you to capture data using IoT devices to identify how things are moving. People can visit digital twin. So insurance company representative or agent can visit virtual environment and look at the digital twin, identify the issues there, try to predict certain things, do what-if analysis, and then figure out the risk that you may have. Inherent risk, sometimes you can have some other risk that you want to check out. So that is one thing which it may change. Second thing is that the marginal value addition or utility that you call, right, will also come from people having P2P insurance, peer-to-peer insurance, right? Today you have in blockchain peer-to-peer insurances, and P2P insurance will come as a part of Metaverse as well, because you have user-created content, user-created places, environments, and if something goes wrong, people may want to be aware about, okay, you have possibility if you interact with some unknown object, you may have viruses or you may have security issues, and you may want to create a specific cover for that. There are already some of the crypto insurance companies in the place market. Market allows you to do P2P insurances on some of this thing. You have OTC market for that. There is a company called Get De-Risk, and this company basically allows you to buy crypto insurances for some of the special purpose items or instruments, right? Next, you have the wealth management. Now, in wealth management, there are two different things in Metaverse 2.0 that you may experience. Besides robo-advisory, you may have even golden visa that you know, right? Golden visa in multiple different countries that you get. Before you can apply for golden visa, you may want to experience how that place may look like, what is the overall social experience. So that may happen first, and then you can apply for that golden visa. Similar to that, you have, on the other hand, your entire physical portfolio that you can link or you can tokenize and then you can distribute it. So that allows you to fractionalize the investment. Now this is Web 3.0 concept where you are distributing everything. In UAE, for example, you have fractionalized real estate. You have already so many companies which are tokenizing real estate and then selling it. Interestingly, these entities are already working on how to integrate some of these things on Metaverse, where user can tokenize on their own without creating SPV outside the ecosystem. Now next, it can be very useful for the regulator to identify some of the Metaverse related regulation. Now just imagine, today you don't have Earth 2.0 directly, you don't have Earth 2.0, which can allow you to do the simulation, which can allow you to test certain policies. Now Metaverse gives you that amazing opportunity where regulator can test out certain policies to see how it happens, right, how it behaves. Interestingly, in CBDC world, you have certain solution which can create digital twin. There are couple of players like you have G+D. There is one company called G+D, and they have this concept where central bank first can create digital twin of the current payment network, and that payment network they can replicate and then try to identify what may be the impact of their policies. Similar to that, you can even create small virtual environment like tier 1, tier 2 cities that you may want to figure out, and this can be complete simulation. Rather than actual people interacting, you can program certain things and see how real people behave with this simulation, because they may not be aware about that this is a simulation. And this again creates some of the moral dilemma, but at the same point in time, it gives you that advantage to test certain theories out, which otherwise you can't. It may sound futuristic, but it is already happening. There are 3 major players in the market who are trying to create. It is not yet in public domain, but they are trying to create, in a way, Earth 2.0. They are trying to create complete integrated ecosystem. You already have such model, simulation model in Python, but now they are trying to create in Metaverse so that you can really identify how things are moving. It will also change non-finance places, but the embedded finance can have a different play, right? You have logistics, that entire logistic part where you want to insure your goods in logistics, plus you want to identify where that goods are. All those things you can do today on the map, but along with that, you can get real-time updates on Metaverse within clicks. Any question, anyone on this? I wanted more interactive session. People ask questions, then I can share 10 more things. Otherwise, this session will end quickly. Yeah.
How do you look at identity in the metaverse?
Good question. My PhD is on that. So, you have identity as a multiple different component, right? You have normally what we call as multi-layer identity. Now, what happens is that you have micro document-based identity where you have, let's say, your driving license, passport. Every document provides certain metadata about your identity. But when you think about cumulative identity, within that, you have multi-layer. Number one, it can be your social identity, it can be your e-commerce identity, it can be your professional identity, educational identity, your travel and tourism identity. So many different ways you can look at the identity. So from the transactional data, how do you achieve a persona? How can you create a persona for that particular segment? That is where this entire metaverse can help you with additional layer. Rather than replacing whatever you have, it can allow you to create additional layer of identity, like your virtual environment identity or your metaverse identity in a nutshell. Today, you can integrate with Amazon, Flipkart, or whatever third-party e-commerce stores are, right? Using API, you can integrate. The moment you integrate with user approval, of course, and consent, the moment you do that, you can capture the data directly, and from those transactional data points, you can create metadata which can help you define that identity. So I can create social identity, I can create my professional identity by connecting to LinkedIn, I can create my education identity by connecting with, in India, DigiLocker, or outside India, you have some of the educational organizations which are connecting, right? So all those things are already happening. What happens here is that using those identity score, I can assign you a score for your level of activity in each layer. Now, I can have a condition as a banking partner that I want someone with 500 score, minimum 500 score in social, minimum 800 score in financial, minimum 300 score in travel, etc. to push this offer. This creates a new economy. This creates a new way in which you can differentiate your pricing and provide better experience. It saves your marketing expenditure, for example. In fact, interestingly, people are creating this model where your social identity can be used to earn you more money. People can pay using their Instagram post. There is a card called Wild as well as Jelly.buzz in India. Globally also you have a couple of cards like that which allow you to post Instagram post, or you can post a YouTube video talking about that brand. If you have X number of subscribers, you will get Y amount of deduction or discount in whatever you want to purchase in future from that brand. So indirectly you are advertising through your own connects. It is a word of mouth that you are doing, and you are making money out of it. So Metaverse will allow you to do similar things. It will create your Metaverse identity in a way, and that identity can help you further get more products that you can consume. Beyond that, when we spoke about onboarding the customer, there are traditional systems like Trulio. Trulio provides you with global identity management, right? You can use any country's passport or documents, driving license, and then verify it. Metaverse still can use those traditional ways in which you can connect to the ecosystem, get the data, verify the data, and do certain banking activity if you want to. Because you can't replace the traditional requirements. You can't say in Metaverse, I'm not going to follow the regulation. I still need to follow the regulation, but at the same point in time, I can provide differentiated experience to my user. I hope that clarifies. Good. So like this, if you ask more questions, I can give more answers. Yeah.
Thank you. Just one observation on his question, right? So we were talking to a customer who has created avatars to play games. So your ability to, win depends on your persona. So in a multiplayer game, if you're winning, the whole thing is, why can't you clone your identity and make you win in multiple rooms? Now the issue is you can win. So coming back to the identity, you can win, but if he loses, who bears the liability? Is it him, or is it Metaverse?
Very good question. In fact, this brings us to the another question about IP, right? This is the question related to overall IP, right? And when you look at some of this new, I will use this term called AI generated images, right? You know already, Dolly, then you have this Imagen from Google, you have this Mid Journey, so on and so forth. There are many more. So when you have this stable diffusion based models which allow you to generate these images, earlier it was trained using some other images. Now after it generates new images, who owns the copyright? Somebody who is typing the prompt to generate that image, or somebody who has trained the model, or somebody who is giving the images for the training, right? Now this is the gray area that we have. Today the stance is very clear that you are licensing the technology, in US at least, you are licensing the technology, now your prompt is your IP. Based on your prompt you are able to generate something, right? And that something is licensed in a way, so you are owner of that generated content. Similar to that in your question, right? There are two parts. However, your question has two parts. One is your persona. Now persona also depends on sometimes mood, the way you play it, as you know, right? If you are very calm and you are stressing, then it will be very different. So all those will play a role. So effectively, your gaming experience that you want to create, right? Training, it is similar to training in a way. So the moment you train something, that training is yours. But if the platform is theirs, that avatar belongs to you, while platform, the technology belongs to someone else. Basically, in my opinion, if the terms of service is not mentioning anything, that avatar is your IP. Now, if somebody is able to copy that, right? Now, you already have in Web 3.0 copy trading, social trading, copy trading. What happens there? You are able to copy somebody else's portfolio. And that copying of portfolio will give some small amount of revenue to those who are creating the portfolio. It is going to be similar here. It is the same thing, right? You are creating your avatar, it is playing very well. Based on your style, etc., if somebody wants to copy that, they will, if they win, then they pay you. So it is a win-win. If my avatar is really good, if whatever I am claiming to be is true, then I am going to win. It means that I am going to earn more.
The question is if he loses,
Yeah, of course. So if they use, if they don't use, oh, okay.
Yeah, then I'm not liable. So that just one more thing on banking. Why are all Metaverse use cases focusing on retail while majority of the banking revenue actually comes from institutional, corporate, treasury? Where do you see that really being useful?
I will tell you a simple thing. as a banker, I have seen like almost more than 10 years I have been in bank. I know that from the risk management side, from the treasury balance sheet management side, those traditional way of banking will not change using this. It will have no bearing on those ways that we are used to. It is more about a particular segment for whom we are creating these products. It is not meant for everyone, any which ways. Every new avenue is meant for different people. For example, API creates a new distribution model called B2D, business to developer. Unlike B2B or B2B2C or B2C, you have B2D as a new distribution model. So API opens up that opportunity. Similar to that, Metaverse opens up business to, let's say, Jain Z kind of a model, where you have completely new people, new set of individuals who otherwise are not target customer. But suddenly you are addressing those customers, you are ready for the future for this set of new users who may spend more and more time on Metaverse. So that additional brain share or mind share, as we call it, is what you are trying to capture initially itself, so that your brand value is there, you are considered as go-to person or go-to institution to use that avatar or products, banking products. That's the only thing. Traditional banking is not going to change. Just to give you an example, people may say that what you can use AR/VR, not even Metaverse, AR/VR, right? Today, how many of you get your physical credit card and really go through your terms and conditions? Nobody, right? Uses the card, throws away those things. And next thing, how many of you are aware about offers that you have on card? Not many people. It is a place-based offer, or let's say on which domain you are, you will have certain offers. You don't know directly. You need to search for the offers, right? Similar to that, how many people may be even aware about that you can get certain cashback or you can redeem certain points for something else? But that is where you have this virtual AR/VR experience where you even using your mobile phone, right? You can put your mobile phone on your credit card and it will start showing you everything in summary. You can experience the different things directly as if it is coming live. So that is the experience part. It is not replacing the legal thing. It is just about experience layer. Same thing.
My question is on the CBDC, especially for the account-based CDBC. You mentioned that CDBC is more akin to cash. But if it's not tokenized, it's just account-based, how is that different from the traditional internet banking? Yeah.
Sure. Even account-based CBDC, when you look at, right, what is the main difference when we talk about in the nature of CBDC versus bank note? We discussed that it is on the balance sheet of central bank, correct? Now, even if it is account-based, which simply means that instead of a wallet, now you have account. In token, what do you have? A wallet. That wallet allows you to use any other service provider's wallet as well. Here, account-based means that you are only having account with central bank and it will remain with central bank. Similar to that, token, CBDC, tokenized CBDC may or may not be interoperable with different wallets, right? It cannot be certain that, yeah, you can have a tokenized, but it will work with everything. But tokenized at least allows you to interact with the Web 3.0 in future if you want to. Because that tokenization, you can create a bridge in between the way people use today, right? You have different cryptos and different cryptos can interact using those bridges. Similar to that, in tokenized crypto, you can even do that. So that is the major difference between account-based and tokenized. Typically for wholesale, given that they are not going to have those issues, account-based is a natural thing for you to start. While token-based, it can have embedded smart contract. Now understand this, right? Again, as I said, after one day, we are going to have the session on CBDC in detail, where I will discuss much more in depth. But just to answer your question, when you have tokenized CBDC, you can have a smart contract embedded as a part of that. And rather than consumer complying with the regulation, currency is complying with the regulation. That is a major difference. I can't even send if I want to somebody where this is not allowed. If I don't have capital account convertibility and this is going out for capital account convertibility, then I can't do that. So the compliance is embedded. You have embedded compliance concept.
So, linked to the way that the identity is managed in the metaverse, and knowing now that the fintechs are coming to the metaverse, I want to ask you, how do you foresee that the cybercrime will evolve? Because you were saying, for example, that you don't see a future where we are going to be removing away from the physical identities, and you see some players like Trulio, for example, being there. How do you see that will evolve the cybercrime?
Very good question. In fact, I will tell you, right, there are already crimes which are rising in a way. And when we talk about metaverse in general, you have, in any system, you have events, right? Events which will trigger something. You will interact with the system and that interaction will result into something. Every interaction is a attack vector, in a way. Every interaction that you do is, in a way, an attack vector for any hacker or somebody who is trying to do something malicious. Now, in this scenario, first of all, you have two levels of security. One is, as you have in OS level security, similar to that platform level in your metaverse. So platform will have some inherent security which will not allow some objects to work beyond a certain scope, as we call it. In programming, you have a scope. So beyond a certain scope, you will not be able to interact with certain object. Now, if you have issue in the platform itself, the scope can be extended. Like you had issue in Java library, Java 11, where you had that fake signature that you can show and it can allow you to go ahead. Those things can happen here also. You can prove somebody else's identity and show as if you are them. So that first and foremost risk is that somebody is able to take your identity. It is much more easier. That is the biggest risk in metaverse. Second thing, after you have identity related issue, the next risk is that how can you have a secure wallet or secure account in a way, whatever we discussed, right? Here the idea is that if you can use Sharma's secret sharing method, correct? You can divide or distribute your secret in the trusted people and you can maybe recover again later with n number of people out of, let's say, 10, 20 coming together and recovering your password for you, even if you have lost your password. So that will make sure that you have security even if you lose something. Today you know how many bitcoins are lost just because that hard disk is not available, right? So that will generate that trust. You have multi-sign wallets, you have recovery that you can do using Shamil's secret sharing method. That will help you have that another issue resolved. Third security issue, as you normally know, is around API, integration issue. When the APIs are not secure, it can leak data. Most of the data, believe me, even here when we talk about, right, it can happen that this Wi-Fi network may not be secure. You may have people who are interacting with a good faith, but the actor on other side may not be good, right? So those issues can create some of the integration related security issues where you have data leaking out. That again is another issue. So those traditional issues are still there, but you have new attack vectors specific to metaverse. Just to tell you, NFT. Now you have new standards coming up in NFT, right? You have multiple new standards. Now some of those standards are yet to be publicly tested comprehensively. So you may have some issues within that standard itself. So those are the issues that I see.
Just a question.
Do you have any questions?
Sorry.
Yeah, just a question on, in your opinion, there's a lot of use cases we talked about that Metaverse can help the normal user. What do you think are the top use cases that will bring value to customers right now? They are not on Metaverse, but they want to explore it. What's the kind of, in your view, the short list of the best use cases?
So first and foremost, this question is the most common question people ask, right? Why? Because you want to see maximum value ROI on whatever you do. Understand whatever customer is already doing, comfortable doing, and he's not facing any issue. There is no use bringing that part to Metaverse because why to fix something which is not broken, correct? So the idea will be something where customer is facing issue. Now, let's assume you already have your KYC figured out. Then don't bring KYC on Metaverse, not useful. It will not add any further value. Maybe you want to only do it for certain people, so fine, you embed it, but don't make it compulsory. But first and foremost use will be product information and exploration. Allow them to experience your robo-advisor, for example. Allow them to experience your product and services in a 3D virtualized environment, right? Kind of a branch banking as you do it. Try to provide them those services. That is the low-hanging fruit. Low in cost, high in return, because that has that PR value. There are certain innovation which you do only for PR, while certain things you do for a long-term benefit. These are the short-term things you can immediately do to catch eyeballs. That will get them hooked. Then you bring more value to that, right? Use that anchor point to bring more value around that anchor point. That is how I will suggest.
How do you think the next wave or the next generation of wealth is going to be created? Because if you look at the distribution of America, you have the Morgan Stanleys and the Bank of Americas with $3 or $4 trillion of assets under management, but they're not really growing in clients. Whereas you have the betterments and the wealth fronts, the new robo advisors, as you mentioned, they're also growing, but they're not growing as fast as they would like to, right? So the clientele is the same. It's not really growing, right? Like you're not having new additions into the banking sphere every day. You have developing countries that are doing that, but definitely not the developed countries. So in terms of the metaverse, is it more about winning wallet share and converting them from traditional banks to the metaverse? Or is it about this new generation of wealth that you think will come, or is it something else?
Sure. So I will tell you first of all, do you know how many alternative asset classes are there today? Any idea? Any ballpark number that you want to give?
50 plus, I don't know.
Yeah, so at least 38 of them I know. 38 of them I know about. So just to give you some example, right? You have investment in wines, investments in cheese. You have investment that you can do in some of the fractionalized real estate, as you know, right? You can do investment in OTT platform where OTT content maker is requiring money. There is a contract in place, so you can get money out of that. You have
Well, you also have 5,000 cryptocurrencies that you can invest
correct.
in.
So I'm coming to that, but before that, I wanted to tell you that there are so many different asset classes. Metaverse or Web 3.0 also gives you one of the asset classes. That is the first thing. So all those asset classes you have, you are just adding another asset class to that list. Now you, like all the asset classes, you will have certain audience for certain asset classes. And what I believe in personally is to diversify. No one asset class you can predict for certain that it will grow. But try to diversify. There are certain debt-based asset classes, and then there are certain equity-based, or then there are certain trust-based, like you have crypto, right? So all those different asset classes, you take varying level of risk based on your risk appetite. So as a CFA person, I can simply tell you that look at the risk profile that you have and decide on what kind of asset allocation can be useful. And Metaverse definitely creates that new asset class for individuals, and the asset classes that we are talking about, other asset classes, you can divide into 3 categories, as I said, and then divide your risk-based allocation on that. Any other question, anyone? Any more questions? So what I want to do is that before we end, you can provide me your email ID and I will give you the certificate of participation very soon. It will be issued to you. Just give your email ID and you will get your certificate later. Meanwhile, you have any questions, go ahead with those questions. Any banking related questions, fintech related, those I can answer.
Hi. There you go. Hi, I am Pratyush Alin. I have a question. What's your view on the super apps which are now coming up and bringing all the financial services under one hood? And
So-
for globally and then for India as well.
Definitely. You know neobanks, right? Neobanks is a term, right? So as people say, what is the end game? In whatever you do, what is the end game? Typically for fintechs, the end game used to be neobank. Because you start with some anchor point like payment or lending, but then you keep on adding new products and that is where you become neobank. You have Razorpay, which started with payment as a payment anchor point. Now they are moving to Razorpay X as a SME neobank. Similar to that, Bank Open, they started with accounting and invoicing. Then they added more and more product. They became neobank. So that is the end game for any fintech. Similar to that, for fintech and non-fintech, the final end game is super app. You don't want people to leave your ecosystem. You want to provide all the services that you can under one umbrella. So that is the overall ecosystem that we are looking at. Now, what is my view? You can create as many super app you want, but ultimately you require that much wallet share and you require that much customer base to justify creating super app. Karim creating super app can still make sense for somebody, right? Which is starting with ride sharing and then going ahead with that. Similar to that, Paytm creating super app or Tata Neo creating super app can still make sense because they already have so many products and services. But somebody just starting with super app itself is stupidity. Nobody, in my opinion, should start with super app. I'm saying that I will start with super app. No, that cannot happen. You should have some anchor point, build something around it, justify creating super app, right? So that is the view.
So one more question. We talk about the metaverse and then the enablement for the fintech. And how about DeFi? If for DeFi, can we do something in metaverse that we move towards uncollateralized loan as opposed to over-collateralized loans? So how do you see that technology stack playing in that game?
Sure. So DeFi, as we know, there are multiple different products within DeFi, right? You have DEX, you have over-collateralized borrowing, and then you have this investment products, all those things.
Hello.
Now within DeFi, ultimately what that does is provide value transfer layer, correct? So for Metaverse, that value transfer network that you want, that is where DeFi will play a role. And as I mentioned earlier, I think you were not there at that point in time, but in payment plus lending, I will go back to that slide just to tell you how the traditional system in the fintech is, right? So if you look at full screen kar do. So if you look at this, right, DeFi in one of these spaces will create that opportunity in Metaverse. So you have, let's say, PayTech, CreditTech, InsurTech, and WealthTech. Now all these different subdomains are there in DeFi as well. So those are the layers that DeFi is integrating or trying to integrate in Metaverse. So when I say robo-advisory in Metaverse, this is nothing but using DeFi only. Traditional robo-advisory you can do, but that seamless fractionalization, seamless transfer of value I can't enable easily. That is where you have DeFi coming into the picture. You already have bridges which are converting from, let's say, fiat to crypto and vice versa, right? And that bridge will help you overall in identifying how can you do certain transfer within the wealth ecosystem or payment ecosystem. Now, when we talk about borrowing, think about traditional product. I hope many people are aware about loan against security, as we call it. Loan against security is nothing but your equity or your debt product that you have. You take loan against them. Now here also you can get it, but you can have much more robust structure. Why? Every regulator in any jurisdiction will have some margin of safety or haircut on top of your equity or debt. So let's say you have $100 worth of equity, you will get loan worth of $50. Similarly, you have $100 worth of debt, you will get loan worth $80 because that margin of safety is required. Because on the DeFi, you can have OTC contracts. So what you can do, you can create OTC contract for, let's say, put option or whatever option you want, and then remove that risk. So the margin of safety is not required. You pay one-time fee on top of that because regulators in traditional system will not allow that. But here you can do that. You can have OTC contract, peer-to-peer contract for whatever debt or equity. And then based on that, you can even give out 100% of loan. That again is a different thing. Right? So those are the new things you can do in DeFi, which you can't do in traditional market. Any other question? Any more questions? Anyone? Great.
Thank you very much,
So,
Vikram.
Thanks for your time today, guys.
Thank you.
And we
Please,
have
a warm hand of
some time.
applause. That was a most interesting discussion on Metaverse. Thank you. I'll take that. Thank you. Go ahead, yes. All right, ladies and gentlemen, stay tuned for the next presentation that will begin in just 8 minutes at 11:30.